Bankole, it's great to have you on the show today. And I was just talking to David earlier about the stock exchange and the rally we've seen, ending the quarter on a very positive note. How did we end the quarter in the fixed income market?
We have ended the quarter indeed in a very bullish trend also, even though most of that action we saw towards the end of August, between the 30th and the 12th of August. We saw a lot of buying into bonds, especially bonds of 10 and 7 years maturity. This was because of what we have discussed so many times, the listing of Nigerian government bonds on the JP Morgan government bonds index. But outside that, outside the bonds movement, in the last 1 week we've seen attention shift to Treasury bills. Yields are dropping on Treasury bills, especially the 1 year. We've seen a lot of demand coming for that. Initially, there was a lull in activity in Treasury bill because there was no calendar. Of course, that hinders your ability to plan. But what we've seen is that Treasury bill moving down again, sub 13 levels.
Okay, of course we had a Treasury bill auction this week. Can you just highlight for us the results of that auction? Clearly, that must have set the tone for the market for the rest of the week.
The 180 days stopped at 12%, and then the 360 days stopped around 12.7 or so. Basically, what we saw was that the only drop in yield at the last auction compared to the one held 2 weeks ago was that it was just the 1 year that dropped in yield. Every other one had an increase in yield. This is not that people are having a reduced appetite for short-term bills, but there's a lot more focus on the 1 year Treasury bill because there's a lot of liquidity and you'd like to lock in at this rate before we see any bullish very aggressive demands coming in August. So it's strategic at the moment. People are keying in because even bonds, long-term bonds are at around 13% level. So why not go in long on Treasury bills of 1 year at about sub 13 levels? Close
to 13 as well. Okay, but how much lower do you see the yields for Treasury bills coming, given the demand pressure that we're expecting over the quarter?
Okay, in the next quarter, we'll see another 100% basis drop minimum because we expect FDI to come in and more of local investment. That's from here. The other issue is that so many speculators have long positions already. Since the news broke, people have been going in long. Right. We've seen FDIs, we've seen foreign investors buy, bonds and T-bills. We know they've bought. It's as if locally here, people have a lot of positions already, and then they would intend to take profits at some point, going into next month and November, basically. So it's going to be fluctuations, but all in all, definitely we'll see a drop in yield, about 100 basis points.
This week, we've also seen fairly high liquidity in the money market. I'm hearing that overnight rates are down to about 10.5%. Can you just tell us the story behind that?
Okay, since the federal allocations were issued, what we've seen was that the federal government tried to mop up, through the CBN OMO Treasury bills, but counterparties, that's bank and other financial institutions, came in at very high rates. Of course, probably trying to get the rates they got some bonds and T-bills at. So we saw scenarios where the OMO bills were not sold in one or two days. But after the primary auction since Wednesday, it looks like there's been a benchmark around the stop rates of the primary auctions that I mentioned earlier, between 12 and 13. So below 14, those who went for OMOs, below 14 today won their bids. Basically, the government will mop up because this liquidity is so much, and people tend to bulking up on Treasury bills and just fixed income securities, basically.
And that may even push those yields lower, I guess, going into next week.
Hello?
I imagine that the move into Treasury bills could push yields lower for Treasury bills going into next week.
Definitely, right. Definitely. That's
okay,
what I would say.
Let's shift gear and let's move on to the naira. Another positive story over this quarter. I think clearly it's been a very good quarter for the financial markets in Nigeria. The equity market is up, bond market is up, and of course the naira has been fairly stable, in fact gaining more recently. Your thoughts on how the naira is likely to play into the fourth quarter in your view?
If I was to, refer to what I expect of what I anticipate for the naira, I would say stability and not further strength, because we've seen this strengthening and then the valuation. We've seen it come in and out, but as we speak, it's about 157. 2030, and they opened on Monday at 70 levels, so naira gained 50 kobo without major sales. The government sold $450 million, and we saw oil majors sell just above $100 million, which is not major. But even on the back of that, naira gained 50 kobo. It shows that most holders of the foreign exchange will not, they're not willing to hold. They're willing to sell, and rather than be on the wrong end of a strengthening naira currency, basically. So basically, I would say stability, ups and downs, around 157 levels, basically.
Well, we certainly hope it will be stable. Clearly, the strength of the naira has been very positive for both the equity market and the bond market. Thanks so much, Bankole, for joining us on the show today.